Welcome back, everyone. Well, as we just heard, artificial intelligence can shake up many industries, set to shake up many industries, insurance included, and our next guest hopes it can actually be used in the insurance industry itself. So everyone, joining us now is Daniel Schreiber, CEO and co-founder of Lemonade. Daniel, thank you so much for joining us.
Good morning.
All right, so now our viewers, they might not be super familiar with Lemonade because it recently launched, so give them a brief overview of what exactly it is and how it's trying to make this whole process a lot more efficient.
Absolutely. So we're familiar with Lemonade if you play, with insurance that is. If you play the word association game, you think of paperwork and encumbered processes and stuff like that, and it's an industry that's been around for ages. We've tried to reinvent it from the ground up.
So what does that mean? Does that mean faster refunds? If you file a claim, does that mean faster refunds? What does it mean in terms of talking with a representative? No brokers, I believe. It's all AI, isn't it?
That's exactly right. So you interact with Lemonade through the website or the app entirely in a chatbot AI-based interface, which means everything's instantaneous. In fact, just a few days ago, we paid a claim in 3 seconds. So somebody went on, a New Yorker, one of our customers, made a claim, he had his coat stolen. Within 3 seconds, the AI had analyzed the claim, approved the claim, sent it wiring instructions to the bank, and paid the claim. So you're talking about orders of magnitude improvement relative to how we think of insurance today.
Okay, so how do you do it that quickly?
There's really 2 elements to what we do. One is replacing brokers and paperwork with bots and AI. So machines can just work at billions of times a second faster than what human beings can do. And that means for a consumer, both radically lower prices. Renters in New York can enjoy 50, 60, sometimes as much as 80% price reduction by using this system just because the costs overload are so much lower. But it goes way beyond costs. It means that you can do it from the pajamas at 4 o'clock in the morning at the comfort, and you do it in seconds. Buying insurance is now done in a minute and a half, without having to interface with any human beings, and making a claim is exactly the same thing.
Now, 3 seconds, incredibly fast to do a claim, would have been a Guinness World Record, but somehow there was a bunch of there's no laws in place with the Guinness World Record people in terms of insurance claims. Can you explain that? Because 3 seconds, again, should be a record.
It is a record, but Guinness have their own notion of what defines a record that they will record in their books, and they need internationally recognized standards. We have regulators that insist that claims get at least answered within 30 to 45 days just to calibrate you on where this industry is at. We're actually paying claims within 3 seconds of submitting them. Not always, but this is the record that we've set. So it's undoubtedly a world record. It just doesn't comply with the rather stringent requirements of Guinness Book World Records themselves.
You gave us a breakdown of how much renters can save in New York City, pretty significant double digits. What is the average that people can save around the entire country?
We've launched in New York and we've applied for licenses in 47 states, but we're currently only in New York. And the savings, as you go up kind of the socioeconomic spectrum, as you have more and more property to insure, we still tend to be cheaper, but the savings are less dramatic. For renters, because the premiums are relatively low, the cost overheads mean that you're paying so much more than you should be. So that's really where the savings are most dramatic. But it's not just about the economic savings. When you work with an insurance company today, you're in conflict with them. Every dollar they can avoid paying you is a dollar more to their bottom line, and consumers know that. So fraud becomes an issue. People feel like it's an adversarial relationship with their insurance company. We've actually changed the business model. We've inverted it. We treat the money as your money rather than ours, and we take a flat 20% fee, so we will never make money by denying your claim.
Gotcha.
So it's not just technology that enables us to pay it faster. We've neutralized the conflict of interest that gives us any incentive not to pay it in the first place.
Now, back in 2015, you raised $13 million from a second round of seed funds, but you didn't even have a demo when you were creating this company. So how did you impress venture capitalists to invest in your company?
We're here in the stock exchange. About 10% of the Fortune 500 companies are insurance companies. The average age is almost 100 years old. This is an industry that if you time shifted somebody from 100 years ago to today, everything would have changed, except if they sat in the board of an insurance company. It's pretty much unchanged in 100 years. And it's a huge industry. We're talking about an industry that's measured in trillions of dollars and that impacts every household in the nation. For entrepreneurs like myself or VCs like Sequoia who were part of our seed round, the idea of taking on such a huge industry that impacts every human being almost, and that is unchanged and unspoiled by innovation in 100 years is hugely tempting. Now, of course, there are big barriers. It's not an easy thing. It's not for the faint of heart. There's a lot of regulation. It requires more cash than just doing an app. but hopefully the rewards are commensurately large.
Okay, so I just want to give viewers a big picture of how it works. They pay a fee, you take a 20% cut of that fee, and then the money left over that they don't eventually use, that ends up going to a charity of their choice, doesn't it?
That's exactly right. We have somebody called the Chief Behavioral Officer, Professor Dan Ariely, who's one of the leaders of the behavioral economics kind of discipline today. And he studied in recent years dishonesty broadly and in insurance. And what he said is that if you set out to create a system to bring out the worst in humanity, it would look a lot like an insurance company. It kind of ticks all the boxes of what not to do. So we decided to become an insurance company. We're not just a tech company, we're actually a licensed, regulated insurance carrier, because we believe you have to change the very fundamentals of the industry. You have to neutralize the conflicts of interest that plague the industry. And that means that we can't just make money by every dollar that I don't pay you drops to my bottom line. That money, in our way of thinking, is tainted. So what we say to you is this: we're going to take 20%, whether you claim or you don't claim. And we see this as providing a service to you. If there's money left over, it's not our money, it's yours. And let's agree, since that money can poison the relationship, let's agree that it's going to go to a non-profit. Underwriting profits go to a non-profit. Why don't you tell us which non-profit you care about? And not only does that avoid putting us in a conflict of interest with you, think about what happens when you come to make a claim. And I say to you, hey, Kristen, I'm sorry that your TV was stolen, your laptop, your bike, whatever it was. Please remember that unclaimed money is going to your kid's school, to the church that you care about, to the non-profit that you're committed to. Suddenly that switches something in your mind and you think, okay, I'm going to be more circumspect in making a claim, which in turn allows us to pay your claim that much faster, because we want to create a company that is trusting and trustworthy. And that really required changing the whole plumbing of the system.
Now, in most states, the insurance buyout it takes about 30 to 45 days, but could you also explain the intricacies of building the app involved with artificial intelligence? Like this seems just so complex to get this going.
It is, and you know, the simplicity of the user experience belies the complexity of the technology, as should be the case. So what you do, and I'd encourage everyone to try it, lemonade.com, or you just download the app, and you're chatting to an AI, and you can't actually tell whether it's a person or not. It's that seamless. And in fact, you're chatting to a lady called Maya, who's a real person on our team, but this is her alter ego. And she sells you insurance through a chat interface you could be WhatsApping with and just saying to her, hey, I live here, what would it cost? She gives you a price, you bind the contract instantaneously, algorithmically and instantaneously. And if it's taking you more than 90 seconds, you're doing something wrong. But so it really is that straightforward.
If people want to talk to a human, do you have that?
Absolutely.
Let's say that they actually go through with a purchase and they use the insurance, and then maybe they decide, oh my gosh, maybe I didn't want to do that.
Right.
And then they feel like they have to talk to a person. So there is that support to some extent.
There is, and through the app, they can also chat to a person. But we have both. We have people who will answer phone calls, we have people who will answer chats. The robots aren't there to the point where they can do everything themselves.
Right.
Humans are still useful for something,
Sure.
So we have those as well.
Because I'm sure there is a language barrier in terms of dialect, in terms of when somebody's talking to an AI representative, that they're not able to connect with them on something that they need an actual person to talk to.
That's right, and it's really a hierarchy and a seamless transition. So we give our AIs names of real people, and you can seamlessly transition. The AI will hand off the conversation to a human when it feels it's exhausted its capabilities.
Okay, Daniel, so many more questions.
Yes,
This is a
so
fascinating segment. We got to run because we got a lot to get through. But Daniel Schreiber, CEO and co-founder of Lemonade, insurance provider, thank you so much for joining us.
Thank you. Good morning.
Coming up, we got a lot of show left for you guys, but first, the CEO of Hilton Grand Vacations stopped by yesterday on why more millennials are buying timeshares right now. Take a look at this.